This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com. This morning, as part of the Financial Repression Authority's ongoing interviews with experts in this area, we have Egon von Greyerz with us. I would refer our new listeners to other interviews, presentations, articles, and breaking news, which can be found on our site, the FinancialRepressionAuthority.com. Egon, welcome. And maybe we could start with you giving our listeners a brief overview of your background.
Thank you, Gordon. It's a pleasure to be on your program. Yes, my background is I started in Switzerland in banking as a young man a very long time ago, I will add. And then I was in corporate life in the UK for quite a long time. And I was finance director and then vice chairman of a major FTSE 100 company. And then back in the 90s again, I saw what was happening in the world, and I was really interested in the investment world. So I started my investment activities and formed Matron Asset Management, which is a company based on wealth preservation principles. And now, since early 2000, we have specialized in precious metals, physical metals stored outside the banking system. And that's what we do now, and that's really our passion to help investors to preserve their wealth, because I think there'll be massive wealth destruction in the next few years.
I think our listeners would generally agree very much with that. What form it's going to take is the question that's up for debate. Egon, how would you explain to our listeners what the macro-prudential policy of financial repression is in your mind and how you've come to see it?
Yes, it's interesting. Financial repression is, to me, one of these fancy words that most people will not even understand what it means. A lot of these terms have been invented in latter years, like QE, quantitative easing. Nobody knows what that is either, but it's just money printing, and then people would understand. Or you take, impairment. Now, before it was losses. In my corporate days, it was called losses. Now it's called impairment. So. And financial repression is a similar thing, And as I said, if you use terms that on layman won't understand, this you can't explain it to. But in my simple terms, financial repression is manipulation and interference by governments in the running of the economy, in the running of the lives of normal people. And that's what's happening now. Well, it's been happening in the last 100 years. It started, it's happened before in history, but now in this era we're in, it started with the creation of the Fed in 1913. And then it's accelerated. And of course, when you then abandon any standards for the monetary system, like the gold standard, then it's a free-for-all for governments to interfere and manipulate any market they want, whether it's interest, or currencies, or whether it's taxes, or eventually, controlling the people. In the longer run, of course, financial repression leads to total control of the people, and police state or totalitarian state, and that's the way we're going in some countries.
I was wondering if you could share with us, from a global perspective, where you're seeing it occur in various countries, because I know you're doing business around the world. Are you seeing it in any area that's more prevalent than another, or any types of policies that are more troubling to you right now that you're seeing?
Well, I mean, everything is troubling to me right now because I've been worried about this. I mean, I already since the 1980s, I saw all of this coming. I mean, it was inevitable. The fact that every central banker says that, we couldn't see this coming. I mean, that's ridiculous. Anyone with just a little bit of intelligence, and of course you can't be a politician, because if you're a politician, you can never see this coming, and central bankers are politicians. But I mean, I saw it then, and let's just, for example, there's a slide I like to show it, which is the last 100 years have been exceptional in historical terms, and people don't understand that. People think that because we live today, that's the way it is, but it isn't. And if you look at inflation since the late 1600s in the US, you see that from late 1600s to early 1900s, it was just a flat line. Inflation was between 1 or 2% with a few exceptions. And a house in early 1700 cost virtually the same as a house in early 1900 in the US. And then what happened? Well, the Fed was created by bankers, by private bankers for the benefit of bankers. Then the system started changing, and this was for their own benefit. So the Fed now, a private organization, controls the U.S. monetary system. And once the U.S. becomes the reserve currency of the world, they control the whole world. And then you see what happened. From 1930, inflation starts going up with the money printing. And then, of course, in 1971, when Nixon abolished the gold backing of the dollar, you see inflation goes exponential, and the blue line is the real inflation line here in the graph. And this is what is happening. Anything that goes up exponentially to that extent, and that's not just inflation, that is money growth, credit, and even population growth, actually. Anything that goes up in a straight line will always come down very fast at some point. We don't know when, but it will do. So that the end to this is not just a sideways move. There will be a massive fall in inflation, implosion of the monetary system, and implosion of assets. And that is to come.
Why is there realistically no way out right now for them to continue to expand the money supply? I'm not saying it's the solution. Our sense is that's the only game they see as available, and it seems to be, or preordained, they're just going to keep doing this until there is a crisis.
Well, there's this wonderful American expression that some Europeans also understand now, which is kicking the can down the road. And all they're doing, any central bank, Greenspan, Bernanke, that's all they did. They just kicked it down the road, hoping that they would survive their term. And someone else would take over the problems. They can see the problems. They see the risk. They can't talk about it. And they only have one solution. I mean, they've lowered interest rates to zero, which is obviously ridiculous and one of the best examples of financial repression. And they have printed unlimited amounts of money. And it now has reached a point in the last few years when it has no effect. For every dollar created, whether it's debt or whether it's printed, we are now getting no increase in GDP in the US or worldwide. And therefore, they have no more tools, but they know that short term, it has worked just pumping more and more money into the economy. Of course, it hasn't been beneficial to the people. The people are just normal people are getting more debt. In debt. They think they actually have an improved standard of living. They don't realize it's either personal debt or it's government debt that they're assuming that they can never repay, of course. And then there is an elite group at the top, the wealthy, the bankers, politicians who are benefiting from this money creation. So, no, the central bankers, it's the only thing they know. It's not a solution, but I think I wrote a piece 2 years ago, called Deus Ex Machina, God out of the machine, which basically said, in the old Greek plays, when everything was hopeless and the world was, there was no solution in the play, they lowered down a man from above that was God in a little basket, and he came and solved everything. And I wrote in this article that I see as the only solution, but since I think that is unlikely, I don't think there is a solution now. So now they have postponed it and kicked the can down the road for a number of years. I think we're getting to the end of that because we can see that when we start measuring the declining and almost a negative return on the credit and on the printed money. So they're getting to the end of the road. How long will it be from now? Who knows? It's taken longer than I expected, but I think we're getting much nearer to an end to the system as it is today.
Yeah, in 2009, 2010, we were writing articles on extend and pretend, and then, as you said, then they started shifting to kicking the can down the road, and now I believe it's really fake it till you make it because of the amount of massaging and I'll call it creative accounting, whether we're seeing, and it's always been in the CPI, the GDP, deflators, and just goes on, which has led tremendously to mispricing of risk, poor price discovery right across the board, and malinvestment of unprecedented scales right now. What does an investor do to protect themselves right now, Egon? What should they be really focused on?
First of all, remember that we talk to investors, you do, we do, but what about the man, and this is a common man, what can he do? He sees that his money is being totally destroyed, but he doesn't even see it. He doesn't even know that the purchasing power of his money is just disappearing because the government doesn't want to tell him that. The government hates gold, and gold is the only thing that proves that. And there is a graph at that. If you look at this graph here now of the currencies against gold in the last 100 years. Gold is a straight line at 100. And if you see all the currencies have been going down since 1913 roughly, between 97 and 99% against gold. And gold represents stable purchasing power. And the currencies represents total destruction of the monetary system that governments are doing worldwide. So you see all the major currencies have gone down by 97 to 99%. And you look at the dollar, the red line, for example. Of course, the big fall in the dollar started in 1971 after the gold window was shut. And this is an absolute disastrous policy. So what is done, of course, is to kill savings totally. People don't save because they know that spending the money is the best way of getting value out of your money. And I mean, this is like a chain letter or a Ponzi scheme. The one who stands nearest the money or spends the money fastest, and the bankers are the ones who can spend it the fastest. I mean, they are the ones who gain. Once it gets out to the people, it's worth less and less. So people are just borrowing and spending. And, this is the opposite of a sound economy, of course. It's all about investments equals savings, as we all know. But nobody saves. And it's the same with, pension. I mean, the pension system today will be a massive, massive problem worldwide. First of all, most people don't have a pension. Secondly, the ones who do have, they're all underfunded. And thirdly, the ones who are reasonably funded, what they have in the pension fund is, as we know, bonds, stocks, property, and a few other things, but mainly those three. And all of those, in my views, are in bubble territory and will go down massively in the next few years, which means that there won't be any pension funds left. So that's going to be an enormous problem for the world as a whole. And this is all as a result of these incredibly bad policies that governments worldwide are doing. And why they're doing it? Because they have no other solution. And initially they're doing it because from when the economy was sound, and all of a sudden they get into the deficit situation because the countries are living above their means, and then governments then need to continue to print money in order to buy votes. In my view, it's very much linked to buying votes and pleasing the people. And the people don't understand that it's actually they're just taking on more debt. And they think that they have a perceived improvement in standard of living, but in real terms they don't. Just to come back to your question, what should investors do today? Well, investors, as I said, is a very small part of the economy because the normal person doesn't have any investments. He has debt. Some people have a house, and hopefully some of them have a house with equity in it, but equity will disappear out of many, many houses that have been bought in latter years, in my view, because house prices worldwide are still going to come down dramatically. So investors, for the privileged few who have a bit of money, and of course the ones who have today, most of them are in the stock market, and most of them will believe that stock market will always go up. Every correction is a buying opportunity because that's been the case for the last few decades, and they will continue to buy every dip. But then eventually, when the market is down 50, 75%, they will panic and sell out, so which will drive it down to, I could see easily many stock markets falling 90% from here, just like in the 1929-30 period. So sadly, it's not the stock market. So how do you preserve the wealth that you have? Well, for the ones who have a little bit of excess wealth or money to invest, I think as we've done, I think gold is physical gold and silver kept outside the banking system, I think is one way to preserve wealth. As you can see in that graph I just shown with the falling currencies against gold, especially when governments start to destroy in an accelerated fashion the value of money, gold will be and silver will be the best way to preserve their wealth. But there's very few people who actually can afford to invest in gold and silver because they don't have any capital.
Many of our listeners, Egon, are concerned about predatory actions that the government will take against gold. They've done that in the past. There's no way of really knowing, but could you share your sense of what governments may or may not do? And if that's the case, what should they be doing to protect themselves now?
Well, I understand their concerns, and of course, nobody knows what desperate governments will do. That's absolutely true. Firstly, what I know they will do is to increase taxes for the rich. That is absolutely certain. And they will do that worldwide because that is a popular measure with the masses. The fact that it doesn't bring in much money doesn't matter. But it will be something that every government in the Western world will do, in my view. So, in 1933, the dollar was backed by gold. And Roosevelt then decided that he wanted to devalue the currency. And therefore, he had to revalue gold because gold was backing the dollar. And he decided then, or the government decided in the US, that the people should not get the benefit, the people who had gold, which is not a lot of people, they should not get the benefit of that revaluation of gold, so that it was then confiscated. What is interesting is, so the people, obviously they got the value which it was before the revaluation of gold, but they couldn't continue to hold their gold. Now, what is interesting is at that point, any gold held by Americans outside of the U.S. was not confiscated. That doesn't mean that will be the same today if gold is confiscated, but that was just an interesting point. It was logistics to bring it back was probably too difficult. But at that time it was confiscated because it was part of the monetary system and backing the monetary system. Today, gold is not backing anything anywhere in the world. So, in my view, and gold ownership is quite widely spread, not just in the U.S., but around the world now, especially, of course, in the East, China and India. Now, in my view, I don't think that they will confiscate it. It's too complicated, and too many people who own gold and silver. In my view, it will be all about taxing it, and I doubt they will tax gold separately. They will just have capital gains taxes on anything that goes up, and there'll be other things going up because of inflation. Anyway, of course, so they will automatically reap very good revenues in taxes from those assets that will benefit from the inflation and eventually hyperinflation that we will see in the assets that will reflect the printing of money.
As I understand, you have one of the largest private gold vaults in Switzerland. Is that true?
We're one of the bigger ones outside the banking system.
And so gold holdings are segregated within your accounts, and they can be held in Switzerland and other countries too? Because I know you operate in Asia.
Yes, we deliberately, we follow our own wealth preservation principles. So we deliberately eliminate ourselves as counterparty. Mm-hmm. So we actually are, for the people who invest in gold, and we have investors from all over the world, and we have lots of Americans because there is no restrictions on Americans holding gold in Switzerland or in Singapore and Hong Kong. And as you probably know, is not even reportable today, gold held directly by U.S. citizens with direct access and control of the gold, which is the case with our company. So we facilitate the buying of gold, or they can transport their own gold to the vaults that we have in Zurich, Singapore, and Hong Kong, and then we have the most unique vault in the Swiss Alps, which is the biggest vault in Europe, a gold vault. So we facilitate, as I said, the ownership of gold, but the investors hold their gold directly in their name, not through our company. So they can go straight to the vault, even without us, and get their gold out. That's the whole purpose of gold ownership in our view. Don't have counterparty risk. You will always have something. You'll have the vault company, or you'll have even if you dig it down in the ground, you have the ground as counterparty. Somebody will steal it from you. But you should not have a financial institution in between you and your most important wealth preservation asset, in our view.
Are there other strategies that you focus on at Matterhorn Assets that would be a store of value to protect assets at this advancement of financial repression?
Yes, I mean there is a degree, of course, of wealth preservation is all about not having counterparty risk, and anything that you hold within the financial system, like stocks or other financial investments, normally you have then a custodian and you have the financial risk. We do hold also mining stocks for clients, only to a smaller extent, because we were worried about all the problems that we've seen in the precious metals mining stocks in the last few years, which has happened. But now mining stocks are the most underloved and undervalued asset you can find. So there is tremendous value. The risk is much higher. You have the risk of the financial system, you have the risk of political risk, taxation risk, management risk. So there are other risks, but to have a smaller part of your funds in that, I think, is correct. Now, any direct hard assets, like if people have more money or investing in anything in the ground, or forestry, agriculture, I think they will benefit dramatically from the inflation that is coming. This is something that we are recommending to clients also.
We've seen tremendous run-ups in agricultural land in Western Canada, certainly in Western United States on a per acre basis. We've seen tremendous run-ups in forestry lots that are not currently being forested, etc., which is part of on Mises' indirect exchange of taking paper and putting it into real assets. So we're already seeing that clearly in the United States, and I'm sure you're seeing it also
worldwide now. And some of these prices are too high, but that's nothing compared to what it will be in the next few years, in my view.
So though they may seem high right now, that's based on money as we know it today. But what is money going to be tomorrow? Not just the value of it, but in what kind of exchange is it going to be in? If we saw the death of the dollar, for example.
Well, let's just jump back a bit and look at. There is a graph here of the U.S. Tax revenue and debt since 1980, which is, I think, it's one of the most important graphs that I normally show. In 1980, U.S. tax revenue was $1 trillion, and the U.S. debt was $1 trillion. Today, tax revenue is $2.5 trillion, and the debt is about around $17.5 trillion. So debt has gone up 17.5 times since 1980, and tax revenue only 2.5 times. And if you look at how debt is increasing exponentially and tax revenue hardly increasing at all. And you've got to remember that this tax revenue is actually, America has not had a budget surplus since 1960. Mm-hmm. There was an artificial surplus in the late 90s, but that wasn't the real one. It was just a manipulated surplus.
You're talking about the Clinton miracle, are you?
Yeah, exactly.
and it was a miracle.
That was a miracle, and debt continued to go up. And of course, I remember all the forecasts at that time. We're going to have a surplus forever, etc.
It's going to cause problems in the bond market, exactly.
Unbelievable. So that graph tells you everything in my view. How, first of all, do you think that the US people can ever repay that debt with normal money? Of course they can't. It's just growing exponentially. And it will grow a lot faster. Now it grows still by about $1 trillion a year. And it will grow a lot faster in the next few years because whatever they say that they're not going to print money, I'm absolutely convinced that they will print more money than they ever think that they will in coming years. So, and at some point also,
Egan, if I could interject here just to support your point, and that's $17 trillion of debt. That doesn't include 10,000 baby boomers retiring per day in the United States. We're going to see 75 million retiring, not paying into this deficit problem in taxes, and about an $84 trillion of unfunded liabilities that are, you want to know what a Ponzi scheme is, I think Bernie Madoff going to look like a piper compared to this one. And I'm not making those numbers up. That's legitimate gap, but it's of that order and magnitude. And we could squabble, but it says, how, as you just pointed out, how can you possibly conceive that it's payable?
No, I mean, it's, what government's doing, and it's not just the U.S., but since the U.S. is the biggest economy in the world, and since it is the reserve currency of the world, not for much longer, in my view, but since it is today, because it's only the fact that the U.S. has the dollar as a reserve currency, that it will be allowed to do this. Otherwise, the world wouldn't accept it. And the U.S. financial situation is no better than Argentina's. It's just that they're lucky to have the dollar still as reserve currency. But, and look at now this debt, the 17.5 trillion is, I think the average interest rate is about 2.5% on that. Now, that's not going to stay. I mean, there's another graph here that I'd like to show, which is the graph of short-term treasury rates since, well, I can't remember exactly when it started, but it doesn't really matter. But it's the last couple of decades anyway. But you see here that in the manipulation, when the Fed is not in any way managing the economy or the monetary policy as they should. They are only panicking and reacting to events. You see here in 2000, when the stock market collapsed, rates were then, short-term rates were 6%, and they lowered them down in just over 2 years to 1% in a panic move because the stock market was going down. So, and then things improved, stock market bottomed, and rates were raised again to 5%, again in a reactive manner. And then we get the 2007 collapse, and interest rates go down. They have to lower them again in a panic fashion. They didn't expect any of this. They're not managing the economy. They're reacting to events. They haven't got a clue what they're doing. And now they lower the rates to 0% virtually, and that's where they've been for the last few years. But let me say that rates are not going to stay at 0%. In my view, they will do what they can to keep short-term rates down. But in the end, when the dollar collapses and the world realizes that money is not worth keeping in a bank, long-term rates will start going up. The people will start dumping bonds worldwide, U.S. bonds, and the long rates will go up and pull the short rates up eventually. And the U.S. debt, which is now 17 trillion, which will go up to 20, 30, 40, whatever, depending on how much money they will print, will have to be financed at 5%, 10%, 15% eventually. I mean, I was lucky enough to live in the 70s. I saw the inflation rate then. I saw the interest rates. That will happen again, in my view. So and then there is no chance whatsoever for the U.S., for European countries, for Japan to finance their debts. And this is when eventually, after massive money printing and hyperinflation, which I think they will attempt in the next few years, after that, we will have a deflationary implosion. That is the only way that this system can be cleaned out, and that will happen, in my view.
Egon, we're going to have to break now. Excellent conversation. Very much enjoyed your perspectives here. Could you tell our listeners how they could learn more about the things that you're doing, your writings, and your investment offerings?
Yes, the best website to go to is the Gold Switzerland website, goldswitzerland.com. And it's totally transparent how we can help people to facilitate the investment of physical gold and silver outside the banking system. Then also on that site, you will find a lot of interviews, articles, etc., with me, with other people, which is very informative. So please go and visit the site.
Thank you. Any last closing comments you'd like to leave with our listeners?
Well, you know, a lot of people think that I'm a prophet of doom and gloom, and yes, from some people's perspective, I am, but I'm not the slightest bit pessimistic. I just see the risks and the dangers in the world, and I think we haven't even talked about the geopolitical side, which is massive. So, I mean, there are more risks now on a worldwide basis that the world has ever faced, and therefore things in the next few years, and it can take longer than we think, but it will happen. Things will be very difficult in the world, and it will be very difficult for our children and grandchildren, than it was for us. And therefore, people should take any measure they can to protect themselves and help their family and friends. But thereafter, we must live our lives. People have lived in war zones all their lives. You've got to, you do what you can, and then you enjoy life, because it's no use being pessimistic. Life is too much fun to be a pessimist. But I think we have to be prepared for change, because the world will look very different in a few years' time, in my view.
Being pessimist is one thing. Being a realist is another. And having insurance and taking out insurance, you hope things aren't going to get bad, but that's why you have insurance, to protect yourself and to take these plans. And my sense, Egon, is the things we've talked about, the authorities are in a trap of their own making, but nevertheless a trap. And sometimes that's actually the best time to invest, because it says there are less options available. And when there are less options as an investor, your probability of success go up, as long as you understand the game that's being played. So that for those that really study, really pay attention and to what's being said, comments from people like yourself, I think there's a tremendous positive opportunity in the next couple of years. Egon, again, thank you very much. Appreciate your time, and hopefully we'll have you back again.
Gordon, I really like talking to you. Thanks very much.
Talk to you again. Bye.
Thanks. Bye-bye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.